So is the Fed on the cusp of executing this soft landing many thought impossible? Joining us now, PIMCO Managing Director Jerome Schneider here at Post 9. Good to see you, Jerome.
Great to be here. Thank you very much.
New data, anything change in your outlook about it? The bond market seems pretty forgiving of it.
Yeah, I think really we're looking through to the fact that the market, as well as PIMCO, expects that core CPI is going to be in that 3 to 3.5% range over the near term as we approach the year end. Is that meaningful? Yes, it's meaningful because of the fact that the Fed isn't necessarily going to achieve its target ratio at that point in time. We're not necessarily going to have the trajectory to make the Fed comfortable to potentially pivot to that dovish. That's clearly what the probabilities, as you highlighted here, put the lessening of rate hikes. But it doesn't also necessarily suggest that the Fed's going to put on the brakes now and pivot drastically to a dovish response. In fact, one of the things we're thinking about at PIMCO right now is the fact that inflation, while you're seeing some healthy returns to some inflation, meaning lower inflation in terms of used car prices, shelter, things like that. On the flip side, one of the things that is very worrisome is wages and wage pressures. And that is not subsiding. In fact, we actually see that as a potential source of increased inflationary pressures as we get into 2024. So the friction and perhaps sources of volatility as we get later in this year and into 2024 is that reconciliation of what are the components of inflation, how do wage pressures and specifically the wage negotiations we've seen over the past few weeks get translated into inflationary expectations going forward, and is that enough to actually give a longer pause to that Fed over those points in time as opposed to the rate cuts that we are forecasting in later 2024 and 2025 that the market foresees. That tension is actually going to be foreseeable. So we might actually see this more favorable, higher yield environment, specifically at the front end of the yield curve globally, for quite some time, making that yield perspective much more attractive.
It's interesting. I mean, and clearly the Fed's not going to, declare victory, say that all is clear, but they seem to be messaging that they want sort of time to do its work, and we're going to keep rates up here. Maybe we have to snug them up a little bit more from here. Markets seem like they've been okay with that type of an idea. Also, some Fed officials mentioning there is a risk of over-tightening, so they don't want to move too quickly in either direction. It's interesting you say that we could have these short-term yields at these elevated levels for a while, because I've started to hear people say, listen, you have reinvestment risk if you just sort of lock in on the short end, and all of a sudden we're going to be seeing the Fed cut rates pretty soon. You don't think that's an issue?
You made two great points. One, the Feds continue to have collaborative conversations. And what I mean by that is that you're trying to find a way to balance the opportunities that the Fed sees and the positive news with the reality that inflation, the trajectory for inflation and other good data may not actually come as quickly as people expect. And that in and of itself is quite telling. And then when you layer onto that the outlook for corporate earnings, profitability, things like this, it actually creates an environment where there could be a little bit more uncertainty than the markets are pricing in right now. So that volatility in and of itself is important. The second thing which I think is important is that while we can take a certain degree of favoritism from PIMCO from the higher yields right now, I do think that the opportunity set is one where you need to create optionality, understand that liquidity conditions in the broader marketplace do remain tight relatively and might get tighter as we continue to see excess reserves removed from the system. And then finally, the opportunity set in terms of yields, while not trying to be too myopic in terms of determining where the Fed's going to go, probably lend itself to a more pensive, thoughtful Fed that doesn't necessarily have a reaction that suggests you're going to see rate cuts anytime in the immediate future.